Hello traders, welcome to Awesome Forex, and here is our YouTube homepage. It is where you can find those links to major areas like links to brokers. We have 2 brokers there, and also we have links to our social media, so you can hit any button at our homepage there, and then it will take you directly to a specific area where you want to go. And mainly this is accessible to those who are using computers, but if you are using phone, maybe you can find those links to video description. Actually, below video you can find those links to major areas, and also you can find the links to other important video. So now, welcome to another session, and mainly our today's session is all about currency pair correlation, or correlation among currency pair correlation. So today we are going to learn new thing that always I have been using it in my analysis, but when I'm telling maybe how I use it, maybe some people they were not aware on how it works. So today I'm going to introduce, and then I'm going to show you how you are going to use it. So it is currency pair correlation. Now, currency pair correlation, this is mainly, or this is simply a measure of how two currencies, mainly if we are specific on currencies, we're going to look on a measure on how 2 currencies are moving or are relating to each other. Mainly we are looking on how 2 currencies they are related, they are related to each other, and mainly it is based on relation in terms of movement, relation in terms of fluctuation in their values, and mainly this is based on a specific period of time. Those fluctuations, they are based on a specific period of time. So you can find that 2 currencies may have relation, maybe 2 currencies, they can have a positive relation whereby rise in value of one currency may have the same effect on another currency, whereby this another currency will have the same direction, whereby it will lead into rise. Or if it is a fall, always all of them they will fall. So that is what we call a positive relation. But in terms of correlation, we have a specific term on how we're going to describe. So we'll discuss this on types of currency correlation. We'll discuss it specifically on types of currency correlation. But mainly here we are going to now we are discussing an introduction whereby correlation is all about relationship, and this is mainly based on fluctuation of price or fluctuation of value between the two currencies. Now, this currency pair correlation is basically measured in terms of what we call the correlation is measured in terms of correlation. We have this what we call correlation coefficients. Correlation coefficient. Now it is measured in terms of what we call correlation coefficient. So now correlation coefficient is simply a measure of currency pair correlation. Now this is the measure of currency pair correlation. So a correlation coefficient which measures correlation among currencies is basically numbered from negative values. Always it goes through 0 to positive values, and mainly it is from -1 through 0 to +1. So this range is what we call the correlation coefficients, a measure of correlation between currencies that usually ranges from -1 through 0 to +1. So now if 2 currencies are measured their correlation and they have maybe a -1 correlation, if 2 currencies have a -1 correlation, this means that they straightforwardly show what we call a perfect negative correlation. We'll discuss this on types of correlation, but mainly if you have a coefficient of -1 between the 2 currency pairs, this means those currencies have what we call a perfect negative correlation. This is what we call a perfect negative correlation. But if you have a positive 1 correlation coefficient, now this means those two currency pairs, they have a perfect positive correlation. They have a perfect positive correlation. And if you have a measure of 0, now this shows clearly that those currencies or those currency pairs, they have a perfect 0 correlation. Here we call it as zero correlation. So sometimes currency pairs may have 0 correlation. Now we'll discuss specifically on types to see what is 0 correlation, but here I'm describing what is currency pair coefficient. What is currency pair coefficient or correlation coefficient? So now we have a perfect negative, we have a perfect positive correlation, and we have a 0 correlation. So now from perfect negative correlation, that is measured at -1, toward 0, always the strength of correlation decreases. So if you have maybe a negative 0.9, if you have a negative 0.9 or 0.8 or 0.6, it means as those values are moving toward 0, it means the strength of correlation decreases. So now we will have different ranges or different terms to describe those strength of correlation, whereby a correlation can be perfect. Now we have the strongest one. This is what we call a perfect correlation. And also when strength decreases, or when that correlation decreases, correlation can be also termed as strong correlation, also can be termed as a strong correlation. And also we have another term, as long as strength decreases, also you will have another term whereby correlation can be moderate. Those are the basic terms actually. Correlation also can be moderate, and also correlation, as strength decreases, correlation also can be weak. Correlation can also be weak. Now this is based on decrease in strength or decrease now in correlation. It is mainly based on decrease in correlation, whereby as correlation decreases, maybe it can be decrease in positive correlation or decrease in negative correlation, because we have a perfect negative, also we can have a perfect positive. Now from perfect negative or perfect positive, we will have a strong correlation. So a strong correlation can be a strong negative correlation or a strong positive correlation. A moderate also can be strong moderate, strong positive, or moderate positive or moderate negative. Weak also can be negative weak correlation, or can be positive weak correlation. So now that's how you can describe what we call a correlation coefficient. Now that's how we are going to describe a correlation coefficient. So now mainly we can discuss on the idea of types. Now we can discuss on the idea of types of correlation. Let us see the concept of types of correlation, even though we have already touched it when discussing the idea of correlation coefficient. So we're going to see it in detail. What are the types? Now the first type of correlation is what we call a positive. Now we can start with this, a positive correlation. We have this, we call it as a positive correlation. So now positive correlation, this is all about the idea that two currency pairs move in the same direction. This is all about two currency pairs. Now they relate by moving in the same direction. They move in the same direction. This is what we call a positive currency pair correlation. So now if one pair is buying, now another pair will take the same direction where it will be buying also. So now we'll see other ideas on examples. Then we'll see idea on examples of those currency pair correlations. We'll see examples based on the correlation coefficient. But now the common example of currency pairs that show positive correlation include things like NZUSD. We have example positive correlation. We have NZ, we have NZUSD, and USD. Now this show a positive correlation, and basically their correlation, correlation change based on time. Maybe some pairs may correlate strongly positive, maybe in a weekly time frame, and other pairs may correlate positive, maybe, or negative strongly, maybe in a yearly time frame. So always correlation varies based on time. So sometimes maybe you can have two current pairs that you are sure that they have positive correlation, but if you watch them in a certain time frame, you may find that they are not perfectly correlating. So you must be aware of a specific time frame at which two current pairs correlate positively or negatively. So maybe based on our example, NZUSD, always they show a very strong correlation in a yearly time frame. This NZUSD and AUDUSD, they have a very strong positive correlation in a yearly time frame. But also positive correlation is between EURUSD and GBPUSD. You can use another example, EURUSD. We have a EURUSD, there's other there, EURUSD and GBPUSD. So also they have a positive correlation which is very strong in a weekly time frame. EURUSD and GBPUSD, they show a strong correlation in a weekly time frame. So those are the common examples of current pairs that show positive correlation. But also correlation can be, now we have a second type of correlation whereby correlation can be negative, or correlation can be negative. Later on we are going to see how you can use correlation on your analysis. We have negative correlation, so we're going to see also, we'll see how you can use correlation in your analysis. So a negative correlation, this is all about the idea that current pairs move in opposite direction. Always two current pairs move in opposite. They move in opposite direction. So now moving in opposite direction, this is described as negative correlation. So if one pair, maybe it will be in a buy, another pair will be in a sell. Always, that is what we call a negative correlation, and this is commonly seen in current pairs like EURUSD and USDCHF. Common example, we have example we have EURUSD, we have EURUSD and USDCHF. Now this is the most common example of current pairs that show negative correlation, and always they show a perfect correlation in a weekly time frame. EURUSD and USDCHF, they have a perfect negative correlation in a weekly time frame. So we have seen a positive correlation. Now among those positive correlation, among examples of those current pairs that show positive correlation, we didn't have any current pairs that show a perfect positive correlation. We had a strong positive correlation, but on the idea of negative correlation, we have a perfect negative correlation between EURUSD and USDCHF. It means they show a correlation coefficient of 1. That is, of -1. It is a correlation coefficient of -1. But also negative correlation is seen between USDCAD, and the second example is USD. Now we have USDCAD. Another example is correlation between USDCAD and AUDUSD, and USDCAD. Always also they show a strong correlation. They show very strong correlation. So now this mostly in yearly time frame. In yearly time frame, you can see a strong negative correlation between USDCAD and AUDUSD. But even other time frames may show correlation, but the strength of correlation may vary between one time frame and another, whereby certain time frames may be stronger than the other time frames. So now this is all about the basics on current pair correlation. So next idea is how you are going to use those correlation, how you are going to use them in analysis, how you can use them in trading. So I have a picture here for correlation coefficient. I have a picture for correlation coefficient, whereby correlation coefficient, as I've said, it shows strength and direction of correlation. It shows the strength and direction of correlation. Now this correlation picture always shows strength and direction. So as you are moving toward -1, it means the strength of negative correlation increases, and as you are moving toward 0, it means the strength of negative correlation decreases. Also from 0 to positive, as you are moving toward the +1, always the strength of correlation increases, and as you are moving toward 0 from +1, always the strength decreases. And when you are presenting those correlation coefficients, they are suggested to be in decimal. Always they must be in decimal. That is a suggestion, that is an advice. You are advised to present them in decimal. So it is 1.0, 1.0 or -1.0 or -0 point something. So you must have decimal place 0.0. That's the suggestion on how you can present those correlations. And another thing here is we can see example. We can see a picture with examples of currency pair correlation, and basically this is specific for USDCAD correlation, whereby it shows how USDCAD correlates with the other currency pairs. It shows how USDCAD correlates with the other currency pairs, whereby we have different time frames there. You must be aware of how to read those correlations. You must be aware of the idea on how you are going to read those currency pair correlation charts. So now we have time frames there, and always we have our currency, that is USDCAD. So now USDCAD in a weekly time frame example, we're going to see maybe how USDCAD correlates with those other currency pairs. Maybe let us see those currency pairs, actually different currency pairs, but I will take maybe 2 currency pairs, the one showing positive correlation and the other showing negative correlation. So example, USDCAD shows negative correlation with EURUSD. It shows negative correlation with EURUSD. USDCAD with EURUSD shows negative correlation. But now looking in a weekly time frame, you will find that it has got a negative 0.98. Maybe I can increase the size, I can add the size of this. Yeah, maybe somehow like this. So now in a weekly time frame we have a negative, now we have a negative 0.98 negative correlation between USDCAD and EURUSD. But now as you are moving to higher time frames, now in the monthly, now correlation decreases now in 1 month, then in a 3 month correlation also goes down, then it goes up again in yearly time frame. Now in a year it has got a negative 0.93, but the strongest one is in a weekly. A strong negative correlation between USDCAD and EURUSD in a weekly, it is in a weekly time frame. So if you watch them in a weekly time frame, you can find that they are clearly moving in opposite direction. But now we have seen USDCAD have positive correlation with the pairs like USDCHF. It shows positive correlation with pairs like USDCHF, whereby it has got a 0.98 positive correlation in a weekly, also decreases in a month, also it is very low in 3 months, and also start increasing in 6 months, and also it's getting stronger in a yearly time frame, but the strongest is in a weekly time frame, a positive correlation between USDCAD and USDCHF. So you can actually read the strength between various currency pairs, and then you can end up maybe having idea about which currency pairs you can trade. Later on I'm going to introduce the way you are going to use correlation in your trading. So you will choose your pairs, and then you will have an idea on how you are going to use those positive or negative correlation, because the most important is the positive or negative correlation. But we have other type of correlation. The last type now, we have the last type of correlation. The third one is known as zero correlation. Zero correlation. The last type of correlation is the zero correlation. Now in a zero correlation, this is all about the idea that currency pair, they do not correlate in any way. They are moving randomly. Now in a simple term is they totally move in a random direction. they move randomly. They move randomly. They move randomly. That's the term which may describe clearly what is zero correlation. They are moving randomly. Sometimes they are in the same direction, sometimes in opposite direction. So that's what we call a zero correlation. So we don't have any further discussion on zero correlation because it is actually useless. Mainly a positive and negative correlation is useful. You may incorporate in your trading. Positive and negative correlation, you can incorporate them in trading, but zero correlation has no any significance in trading. So now let us see how you are going to use currency correlation in your analysis. How to use currency correlation in your analysis. Now there are many uses or various ways in which you may use currency pair correlation, but here we may discuss only 2 ways on how you are going to use the simple ways. We are going to discuss 2 simple ways on how you can use currency pair correlation. Now the first way on how you are going to use currency pair correlation, they are used to eliminate counterproductive trading. We have this, we call it as a counterproductive trading. We have this, we call it as a counterproductive trading. So currency pair correlation, either positive or negative, it's very important to eliminate. Now it is to eliminate a counterproductive trading. Now in a counterproductive trading, now we're talking about the idea that you may trade maybe 2 currency pairs or 3 or anything else at the same time, but mainly let us consider when you are trading maybe 2 currency pairs. So if you are trading 2 currency pairs with negative correlation, let's consider those with negative correlation example. You are trading 2 currency pairs with negative correlation, then you open a position in the same direction at once. Those 2 currency pairs have negative correlation, then you open 2 positions with the same lot size and then in the same direction. Example, you are going short, maybe you are selling EURUSD. Let's say example, you are selling EURUSD. At the same time you sell USD CHF. Now EURUSD and USD CHF, they have got a negative correlation. So now if you are going to short them at once, now one will be selling as how you have done, and the other will be buying always. So now when one is buying, that positive that you get from that pair, maybe from EURUSD, will be cancelled with those losses that you will get from USD CHF. So this is known as counterproductive trading. And mainly you will end up into loss because you will be charged things like spread, or you can be charged from commissions, so you will end up into loss. But sometimes if there is difference in pips movement, maybe you can end up into a small profit. Sometimes you may end up into a small profit if maybe you have EURUSD and USD CHF and then you have done short trade on both. So if the one that is in positive has got a high pip value, so you may end up into a small profit. But now this has got a very small chance to occur. Actually, there's a very small chance to profit from this. But mainly what we're supposed to understand, if you have an idea about currency pair correlation, so you will avoid the counterproductive trading by maybe selling 2 currency pairs or buying 2 currency pairs that are moving in opposite direction. So you may do a sell or buy in 2 different currency pairs showing difference correlation, or you may sell them all together, maybe 2 or 3 currency pairs that show positive correlation. Now the second uses, always currency pair correlation is very useful to confirm your analysis. It is used to confirm. Always it is useful to confirm your analysis. Always you can confirm things like trend, You can confirm things like trend, maybe by looking those currency pairs with a positive correlation. So if you are trading maybe those currency pairs that show positive correlation, and once you have maybe an upward trend in one currency pair, so you're supposed to see the same trend on the other pair. Also, you can confirm things like breakouts. You can confirm things like breakouts. Maybe if there was a certain level or a certain zone that the price maybe was ranging, or in a trend line or anything else. So once a trend line is broken on one currency pair, you're supposed to see the same event on another pair. So that will be like a confirmation for your entries. So this will provide things like a confirmation for your entries. So that's how you're going to use those currency pair correlation, and these are some of them, but we can have even more than 4 uses. There are more than 4 uses, but in a simple and clear understanding of currency pair correlation, now you can start with those 2, which are very, very useful. But we can have other things like hedging. We have other advantages like hedging that are very technical, so I cannot introduce those other uses because they are very, very technical. But for today, now let us end up there, and I'm sure you have got something. So if you like this video, make sure that you hit the like button, and also make sure that you put your comment if you have any suggestion, and also make sure that you share and subscribe to this channel in order to be notified for other videos that are going to be uploaded. So thank you for your time, and welcome again to Awesome Forex.